It's quite possible we have seen the cycle now, or the peak in the cycle. But at the moment, the Fed, as you can see from the report, are very clearly not ruling out any more rate hikes. And I think that's very important because if the Fed can still raise rates later, they still had a forecast for a hike in next year, then it's very hard for the market to really push the dollar down aggressively for the time being. And what was interesting was it was a very dovish Fed meeting, and yet the market reaction was quite muted. The dollar did fall, but did not fall aggressively.
So you see dollar, look at the dollar index there, 95, 90, holding around those levels, or what do you see as a comfortable range for the dollar index, given that we now have the prospect of the Fed, not even a prospect, the likelihood of the Fed being on hold for the whole year? Yeah.
So I think what will happen is, if you just take euro dollar as a proxy for the DXY, the euro has been trapped in this very dull range of 112, 116 since October, and we're still in the middle of that range. I think you need a breakout on either side, then to push the DXY around. If we don't get that breakout, then what I expect would happen was the dollar will actually recover its losses in the short term, because the carry benefit that you have from holding dollars still remains very high relative both to the euro and to the yen as well.
Okay, Hadley's got a question for you.
And Mansoor, it's Hadley out in Abu Dhabi. We're talking about these geopolitical headwinds and how they affect the currencies. I think it's going to be really interesting to watch where we're going to head with Brexit, because we've seen so many strong moves with the pound sterling as well. I mean, what's your outlook, given all of the noise that we continue to hear from Parliament and Theresa May herself?
Yeah, sure. It's really interesting now because we've only got 8 more days before we get to the point where the UK would leave without a deal on March 29th. I think what's going to happen in the next few days is the markets are definitely going to be becoming more and more volatile. So far, they've been very calm about this week's events. Next week, as we get towards the deadline, if we still don't have a deal approved by Parliament, if the EU are still saying it will only be a short extension and a deal needs to be done next week, then we'll start to see the pound begin to react a lot more volatilely to all the political developments. It has been surprisingly calm so far this week.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.